Hey everyone, how's it going today? Hope you're having a good trading day. Certainly one that is full of excitement. What a trading range after some subdued volatility. We finally have some excitement both up and down. So for folks that are trading the intraday, I hope you're making some money on this. Looks like we got right to that gamma flip level that our model calculates and just got rejected there. We've got a midpoint printing on screen, so put call volume is within 20% of each other on the four most active strikes. So more of a balanced type of regime now. We see a little bit more pressure, a little bit more distribution coming in. It's interesting. Looks like we're probably headed down to that most active put strike, which aligns with a pretty large level of resting liquidity there. Wouldn't you know it? Almost as if folks are watching these things like we are. Almost as if it has a really big impact on price discovery, right? It's always fun. You know, we get to see the mechanics of the market in a way that I don't think a lot of people pay attention to it. So again, watching that, the two levels that I'd be keeping a big eye on right here and now would be this put wall. This is the largest area of net put positioning that we're seeing within spot. So it's pretty close. And these are SPX levels in the options column that are translated to ES. So I recalculate that delta every night, right? That gives me a little bit more insight as to what the differential is more accurately. And then that's reflected during the next day's trading as these options levels are repopulated. And we can see there's a reasonable amount of resting liquidity just right above that put wall and then just right at that hot put level as well. So I think that matters. It does act a little bit magnetic. To the credit of buyers, we did see a large iceberg come in here, 2,000 on the buy. And that, that iceberg was the largest that I've seen, I think, trading today. It did help to pull up that point of control because so much volume was transacted there. But now we're still seeing sellers remain in control here, unswayed by that large passive accumulation by buyers and taking price below the point of control and now testing VWAP. So someone asks, for stops and icebergs, I just haven't figured out how to use them strategically. So the way that I look at stops and icebergs is I try to kind of parcel them out to which market participants I may be seeing the flows from. So for stops, and I also have my Bookmap set up so that I'm not seeing every stop and every iceberg. I'm seeing the ones that are several standard deviations larger than the prior 30-minute period, right? So I'm really trying to pay attention to the ones that stand out. So first, that's the first most important thing is like if you're just looking at every stop and every iceberg, you're going to get a lot of noise because there's a lot of that flow that's much smaller and much less consequential. So, looking at increasing the standard deviation and reducing the sample time, I think is the first most important thing because if you're looking back 20 or 30 minutes, you're going to be looking at flow that's more relevant to the present than if you're looking back an hour or two, right? Because there's a lot of changes that happen in internal dynamics pretty quickly, particularly after the open and then as we get into the later day. So that first and last hour of trading, you got to kind of be sensitive to how that changes, and having that built into your time frame, I think, is important. So with that being said, the way that I look at stops is I look at these as more price sensitive, shorter term traders. Extreme moves and stops help me to get a sense as to whether those shorter term momentum driven traders are getting blown out of their positions. right? If you see an exhaustive stop run, and then you start seeing icebergs going the other way. So let's say, you get this big surge higher in price, and a bunch of shorts get stopped out. They're forced to buy into that surge higher, helping it happen in a sense. And then you start to see icebergs distribute into that. So they start, you start seeing thousands of icebergs on the sell side into that. That starts to give me a sense that, okay, a lot of the smaller shorts were blown out, and now more institutional players are pushing in and they're distributing into that strength. Then that tells me we're likely to see a reversal. And so I wait for price to confirm. I also love to see things like, more money coming into that most active put strike, that hot put. And you can see that with the volume that we track on screen. If we start to see some convergence there, then I'm looking for a reversal. And I'm looking for that flow to tell me that there's a reversal happening there in terms of where market participants are going. Because on the one hand, a bunch of the small shorts got blown out. And on the other hand, you have these institutional participants that are less price sensitive, but more impactful overall in the flows of the market. And they're starting to distribute into that. That would be one of those things I'd look for, and then I'd wait for price to confirm. And I'd say, okay, this could be a good opportunity to, fade that move. So let me know if that helps. We are seeing just a bit more of a drawdown here to that put wall. I think that's the next level to really watch. Yeah, so if you're following on the stream, you have my settings and you have the benefit of my settings. So that should help because it reduces a lot of the noise. So you're really looking for those large groups of stops and icebergs. Like this 2000 iceberg here, it's kind of important if we continue to see that flow absorbing selling pressure. One iceberg that big in isolation, which now it's recalculated, it's grouping them together a bit. Now you see 3,200 around here. That's still, it's big, but I'd like to see more of that absorbing. So now we have an 810 here, right? And you can see that price is getting a little bit more stable here. Let's see if we have a continuation of that passive accumulation. On the other side, we did have 208 contracts stopped out here. It's not a lot. And if you want to look at a glance, by the way, you've got the radials here on the lower right. So you can see, for example, if icebergs are like really positive and stops are really negative, or vice versa. If you see those divergences, that's an at a glance indication that there's those divergent flows happening over the last 30 minutes. Because everything that I have on the chart, I really try to focus on 30-minute time frames to train the data. That way, I think it's a little bit more relevant versus going too long or too short. And then I try to use higher standard deviations for the stops and icebergs. So you really only see the things that I think are impactful. Similarly, with labeling resting liquidity and how I have my heat map optimized, you're really only going to be focusing on the areas that are big. Like nothing gets labeled if it's less than 250 contracts, because on the S&P, I don't think it matters. It's not as impactful unless it's a really illiquid day. And that was a great question. I hope it helps folks that are looking at this stuff, because I do think it's really important to get all the value you can, particularly the combination of Bookmap and my SPX options visualizer. You put those together and you really do have a more institutional view of how markets are trading. And someone says they're kind of stunned that the VIX is so subdued. I would just comment on that. It's interesting because I still think there's vol selling into this. I also think there is some removal of hedges. As you know, we get CPI behind us. Yes, it was hotter than expected. Yes, it shows a retrenchment of disinflationary progress. But the event is behind us. And so, therefore, some of those hedges that were put on, particularly because of the event, can be removed. And then we do have these passive flows bidding up the market. We're one day out from VIX expiration. These passive flows are at their sort of crescendo moment. Skew is relatively elevated, so you get this bid behind the scenes for S&P and, to a lesser extent for some of the highest weights in the S&P. So right back there, the point of control on S&P. Let's take a look around some other markets here too. We've got the NASDAQ coming up. This is actually a reasonably large level of resting offer just above us here on the NASDAQ. 141 contracts. This thing has an order book depth of just 8,000 contracts. Contrast that with the S&P, where there's nearly 60,000 contracts, right here in order book depth. It's a pretty big difference, right? So it takes less volume to move the NASDAQ more. So when you see a resting offer of 141, that's orders of magnitude different than what you're seeing in the S&P, and therefore it's important. And that stacked order is now 295. So perhaps a little bit of a magnetic pull for the NASDAQ into that. We'll see. We've got oil coming up to 78 now, really clearing 76, which was my key pivot for crude, was a very important move. Let's see how rates have been trading today. We still have that big dump from earlier when CPI came out. This is the 2-year on screen. And they really haven't recovered. So rates are still pushing higher here. That's not necessarily what you want to see if you're going to be bullish of this market. You see similar in the 10s, right? They had a big drop. They never really recovered. I think the resolve of the Fed is now being recalculated here to keep rates high. It doesn't mean they're going to hike more, but keep rates high, keep rolling off the balance sheet for longer. See what's happening in the 30-year. I'm sure it's a very similar look. Yeah, you got that huge gap down on CPI, right? And then you have just a flat line from there. No real event volatility catalyst for any of these rates, futures after CPI today. Gold's not been too great today. This thing has just been a really ugly mover. In fact, we may now be, I'll have to pull it up on my longer time frame chart. Yeah, we're starting to look a little more toppy in gold here. So it's been coiling up for a while. I think if it breaks below what I've been looking at is 1998.70 on the front month contract. I think if it breaks below there on a closing basis, we could see a continuation to the downside and possibly down to around 1943 or so. So something to watch for gold. So far, not looking so good. Spots trading below 2,000 for the first time in about a year or so. And you've got the euro. Similar look here in the euro as you see in gold and rates. Just that big dump. The dollar is having quite a day. Seasonality favors a strong February for the dollar. We're certainly seeing that, right? And then let's finally take a look at the yen, and we'll circle back to U.S. equity futures. Same look for the yen, though. Just that huge dump earlier. More continuation there than maybe elsewhere. And to this one, there is a real recalibration happening. There is this rumor that, the Bank of Japan was going to start normalizing their policy late last year. Then it became early this year. You saw market positioning change. The yen caught this big counter trend bid. You started to see a bit of movement upwards in the longer end of the Japanese yield curve. Now all that's being reversed. The yen is and the Bank of Japan made it clear they're not ready yet. They still want to ease. They still want to try to be accommodative because their economy is ground to a halt. Last night we got PPI data from Japan. It was basically flat, right? Year over year, flat PPI. That's kind of remarkable if you think about it. If you think about that, it's kind of remarkable, and it's interesting. But it tells you a story because Japan is so reliant on external resources, and the yen's been weakening. So a lot of those external resources have been going up in cost, and yet PPI is still flat year over year. So there is still a lot of weakness in that economy. We do see that resting bid here right near the hot put that continues to grow. 33,000 volume transact at that strike. It is growing as well. But options flows are relatively balanced here. That's why the midpoint is appearing on screen. So, folks, how are you doing out there? How is your trading day going? Are you killing it? Are you not participating? Just curious. Okay, so someone wants to look at RTY. Let's see what we can do about that. RTY H4. It's going to put that over here, so we're just going to move that down. The rest of the equity futures, much to the chagrin of Horse, who doesn't approve of Russell's existence because it is an index of terrible companies. And he's not wrong. We're just going to clean this up a bit. We don't need necessarily everything displayed here. So we'll let this populate for a minute. But also another somewhat illiquid trader. It's about 7,000 contracts on the order book depth. One thing to consider on this week as well is this is OPEX week, so all the things that we're used to as traders, all the statistical probabilities of outcomes from opening ranges or technicals or order flow become a little more tenuous. So it's a little more difficult to have a lot of confidence in some of the things that we may otherwise, they may work well for us, but, this week it's less likely that they're going to work. And these are things that both Horst and I have back tested going back many years, that just OPEX week, you got to be a little bit more risk adverse, smaller position sizes, wider stops, and sitting out more. And also looking for trades in other markets. So for like the absorption and reversal type of trade, I would say those are going to work better out of OPEX week as well, because you're going to see a lot of what are ultimately more price agnostic players who just have to move positions, right? They have to roll positions regardless of where price is. They're transacting this week in size in the options market. And that has a pretty big impact. And tomorrow is volatility product expiration, so you have a lot of vol rolling last minute happening today as well, right? That's one reason the VIX has a bid. You can kind of see it in the front month getting bid up a bit, then what will become the new front month tomorrow. And that takes a little bit of, I would say, takes a little liquidity out of the market, that bid for vol. Sorry to hear it, Aubrey. Yeah, choppy tape today. Retesting that put wall. We've got that resting bid at the hot put continuing to grow here. I think that is material. I think it is going to be important to see how we react here because we seem to be cutting right below the put wall. We seem to see more liquidity coming in on the bid side, and that tends to act a bit like a magnet, particularly in a market there's not a lot of volume transacting here. So price tends to go where it's wanted. That is to say, if you look at the market through auction theory, if there's demand, then price is likely to head towards that demand if there's no demand at the current level. And you do see CVD continuing to roll over here now, negative 17,000. I'm going to try a little experiment here, so forgive me if I'm silent for a minute or two. Just going to see if something works. And we do see price continuing to test that put wall, so watching that pretty closely here. I think if we cut below that hot put and that larger resting bid becomes something to watch. Let's see. A little bit of a bounce, not too much. Things are kind of settling here. We've been consolidating for the entire period on screen, really. Last 2 hours just been more of a sideways chop than directional overall. Yesterday, you may call a bit of a head fake look above. Getting some continuation today, albeit from outside catalyst. Still makes yesterday look a bit uglier, though, overall. Interesting. All right, well, now the live stream can go out on Twitter too, and it is. So that's kind of cool. Just playing around with different features on here. Having a little fun. Seeing a bit of a bid off that put wall, though. Oh, wow. 53 people just joined me. Hey, guys. How's it going? Welcome to the stream. Having a little fun with this functionality. You know, I haven't messed around with streaming on here too much. So, giving it a shot now, as it were. So on screen, folks, whether you're tuning in now or you've been here, we've got Bookmap. We've got a whole bunch of different futures contracts that we're watching. We're also looking at my SPX options visualizer, which gives you a sense as to where there's options activity transacting in the S&P. And this is going to be expanded to a whole bunch of different stocks and ETFs pretty soon. So that'll be neat. But for now, seeing a little bid off that wall of puts, which coincided with an area of resting liquidity. Typically, when you reject around a resting bid, it is a bit bullish. You see us crossing above VWAP and just pinging the point of control here. Let's switch over to the NASDAQ. NASDAQ's a little lower than the point of control. VWAP is even further above that. So we're really looking at 17,750 as a pretty important level to push above. With the Russell here now on screen by popular demand, we can see really this is not a very liquid trader. A lot like the NASDAQ, there's not a lot of order book depth, but we do have more resting liquidity above than below overall, with the exception is one really big bid at 1980. Then we've got oil pushing up to 78.20. Nice move there. Crude's catching a bid. This is a continuation, by the way. This has been a bit of a theme today. You had the pressure post CPI, but now we're seeing a pretty constructive tape in crude oil. Pretty decent amount of accumulation. This is not the most liquid trading vehicle, but that's one of the reasons crude can be a little bit more exciting to trade. Here's 2-year note futures. Really, again, never recovered from that gap down from CPI. That was just violent. Rates are moving higher. That did help to put some additional pressure on stocks, including and especially the stocks that are more rate sensitive, right? So the Russell is just getting absolutely walloped today. You can see the 10-year note futures, similar look as the 2s, just that big gap down and some continuation lower. 30s are the same story as well, just been chopping, but they had that big gap down and been pushing lower there. So not a great look in the rates markets. This is a pretty decisive area too. We see continuation lower, suggesting, you know, with price going down, rates are going up, and we could have more upward pressure to see in those rates, and that would also likely push the dollar higher. So that's important to take into consideration, that you could have that impact of rates higher, dollar higher. Typically that leads vol higher. And all those things are not necessarily the best thing for equities. So these are all areas to watch closely to get a feel, because the correlation between, I'll say the negative correlation between rates and equities is on the rise. And we do have more inflation data volatility, which is likely to increase the volatility in the rates market overall, which then tends to have an effect of amplifying equity vol. So it's kind of like a full circle effect. Someone asks, do put and call levels confluence usually with big block orders? So that's a great question. It depends. Okay, so when we're looking at these levels here, if you look at the hot put level on screen, you can see right next to it, you've got about 400 on the bid, around 49.70, right? So if we were to get filled at that hot put level, then you would see several hundred contracts transacting there, and that would be larger block trades as a part of that. So in some senses, yes, they are material because you do tend to see price look at these areas where people are transacting these flows, and you tend to see resting liquidity build up around those levels. And when it does, it adds to confidence. That convergence adds to confidence. Like, for example, at this hot call level, 39,000 have transacted. We've got a plus sign there because that's the most active option on the chain of about 10,000 contracts in the S&P 500 today. And you can see there's that resting liquidity building up just at that level. So I would say the potential for block trades to be executed at really popular strikes is high. Hopefully that helps to answer your question there. It's a great question. And we are pushing just above that point of control now here. We pushed above VWAP. Let's see how the NASDAQ looks. I really like to see the NASDAQ's momentum lead the S&P. And we had a little bit of that earlier when we had that pop, but now it's kind of fading a bit. So I really would like to see the NASDAQ show some higher conviction to pull the S&P higher, just because if you think about it, if you contextualize it, the NASDAQ has been a big part of this rally from the October 22 lows, but really for many, many years. It's been the leader of momentum. And I would say unless there's a big rotation happening, the NASDAQ needs to continue to demonstrate that leadership. So even in microstructure, even intraday, which is what we're talking about here. So let's make sure we're all in the same time frames. It's important. Someone asked, what are my thoughts on these blow-off top narratives? It's a great question. I think it is something to be concerned about because, typically you see that type of price action during a time when there's very high levels of concentration. It's much more healthy to make new all-time highs when you have broad participation and many companies are making new all-time highs. We don't really see that in the present economy. So I feel like it's sort of like a K-shaped recovery, whether we're looking at the economy or the market. And there are parts of the market that really haven't performed nearly the same way. So my thought would be, if it is a blow-off top, and that's a big if, but if it is a blow-off top, what I would really be looking for is some kind of material risk-off event for one or more of the now magnificent five. Remember when there was like 7 or 8 of them? Apparently now there's only 5. So the numbers of the leaders are shrinking here. And I would, Apple and Tesla, most noteworthy, not participating really anymore. So I think that it's important to look at that and say, okay, so on the one hand, you've got all this leadership in just 5 stocks. Their call skew is blown way the heck out. So what does that tell you? It tells you people are ultra mega bulled up on these things. They're much more concerned about missing upside than hedging downside. So if there is a risk-off event, you've got a lot of motivated sellers because they're in at higher levels and they've got a lot of sensitivity to time and price, right? If that call skew starts to move away and normalize because a lot of people are distributing their calls and because those calls are losing value as price moves farther from those strikes, you do have the potential for more countervailing flows. And so that's one part. That would be sort of like the kindling. And then the fire would be if there's a material risk-off event. Like, for example, and I'm not saying it's going to happen, but if it were to happen, let's say NVIDIA didn't report earnings that impressed their investors. That's a pretty significant issue. If the market doesn't react well to that, that could lead to a more meaningful corrective event, in my opinion. So we'll have to pay attention. Feb 21, right? It's about just over a week away when we get those earnings. But that would be my thought, is that the real risk here is that with leadership so narrowed, if those companies start having trouble and it becomes like the MAG 2 or 3, I think it's much more likely that that is 100% going to lead to a much more difficult market environment. So whether this is a blow-off top or not, to me, it depends a lot on whether we see this rally broaden out and whether or not there are risk-off events that start to, take out more of the captains, so to speak, that have been leading it this whole time. I would rather see, during all-time highs, much more companies making all-time highs, much more, leadership from a variety of sectors. I would feel much more comfortable about that not being a blow off top. 14 out of 15 weeks of upside in the S&P, really today being one of the more meaningful downside days we've had this whole year. It's not normal that the market performs this way. It's not normal that it just keeps going up and up and up. Even if you're very bullish of the market, you should want a correction in time or price or both, because that's how a healthy market moves. It moves in more of like a stair step pattern, climbing that wall of worry, not just going and going and going and going with fewer and fewer stocks leading the way higher. So I would contextualize it as it could be a blow off top, but we need to continue to track what's happening underneath the surface. It's too early to make that call yet. Let me know if that helps. All right, so let's switch the stream back here to the S&P futures. We're still in this sort of consolidation mode here. We have been for, really about 2.5 hours plus, maybe almost 3 hours now. Let's zoom in a little bit, though. They always say when in doubt, zoom out, but it also helps to zoom in, both in terms of time and price, just to get a better view of the microstructure, what's happening underneath the surface. And you do see this building of acceptance above the point of control. Let's see if that continues. We'll zoom out a little bit just to see some of these options levels. So we have the hot call continuing to build, about 40,000 transacting there. Though the hot put, most active put, 38,000 there. So we still have that midpoint on screen, that area of balance just below where there's about 424,000 on the offer for S&P futures. So for those that may have tuned in a little later, on the right side, you're seeing a column that is showing the options activity in the S&P 500 index options, which is the most important liquid options market in the world. We're about 1.2 trillion of notional trades every day, and about almost half of that is trading with expirations of the same day, or what are called 0 DTEs. I'm taking those levels, I'm updating them every minute, and I am converting them to S&P 500 futures levels, recalculating that delta nightly so I can plot it right on screen. It's pretty helpful. You can see the confluence of resting liquidity, where options are positioned, and these active flows. And that helps us to understand more about what's actually happening in the market. Got a bunch of folks on here, 89 people. Thank you for tuning in. Appreciate that. So I'm simulcasting right now to a bunch of different places. My Discord, where I stream more often, but also to Twitter or X, or what do we call it? Does anyone know what we call it now? I'm lost on it. And also to YouTube, which I'm still pretty sure is called YouTube. It's called Zitter now? Oh, you're killing me. You're definitely... So does that mean when we're sending out information, they're Zeets or Zits? What is that? What happens? Oh, I see. Okay, I'm not going to repeat that on air. The pronunciation. I'll just say it's similar to the pronunciation of the Chinese autocrat's name. I'll just leave it there. So there's some interest in the Discord. The Discord I run is part of Traderade. I run it with my partners, Horst and Aisha. We talk about trading. We share our ideas, our views on the market. We've got this Bookmap stream going during regular hours for the S&P, the NASDAQ. We've also got unusual options activity alerts, news feeds, and a lot more. We've got some really cool bots that Johnny Dankseed set up that show a lot of unusual flows and interesting trade setups. It's an awesome place. So for folks that are interested in checking it out, please do. We try to make it a community. Yeah, of course, more streams to come, by the way, everyone. This is going to be a much more regular feature, especially on the Discord. I really enjoy doing it. And, I've got a lot to share. I love the combination of looking at the markets in real time and also educating about some of the concepts we're seeing over multiple different time frames. It's a lot of fun, and I appreciate that you all appreciate it. Makes it even more fun for me because that's what it's all about. I started my journey on social media and elsewhere in the world of finance because I wanted to learn, I wanted to share, and I wanted to meet people. And so it's like all coming together. So just glancing back to Bookmap, because we are still trading this market today, we do see price cutting below that point of control. We're trying to build some volume up there, but not yet. Now retesting VWAP here. We do see that resting bid at the put wall disappearing, however. And some rather tepid iceberg buying happening here. Between the warm, hot wall, do I have it right that the wall is the highest level of gamma? Please give me a little bit more info about what you're talking about. Are you talking about put gamma? Like if we're talking about net put gamma, then yes, the put wall would be the highest level of net put gamma within 5% of spot. The inverse of that with the call wall. Yeah. Okay, so someone has asked me to explain icebergs. I know there's a lot of questions about these. I'll just go over it again because I think it's a really important area to understand. So first, what is an iceberg? An iceberg is an order that is larger than what is shown in the order book. Okay, so let's say you're a really big institution and you need to sell 10,000 S&P contracts. And there's just no two ways about it. You have your order, your boss tells you got to lighten up your book, whatever. Okay, but you can't go and show the market that or people will run away from your offer. So what you do is you shrink the size of your offer to maybe several hundred contracts. And what happens with an iceberg order is, like, let's say you make it a 400 contract order, right? You're going to have that 400 contract order flip through 25 times to get rid of those 10,000 contracts. Now, you'll sit your order there. It'll look like it's an order that's just like a limit order on the offer side of the order book. But every time it transacts, it'll refresh, right? Until you get all that volume transacted. So the purpose of an iceberg is to essentially hide your size. The advantage of it is that it doesn't scare price away from your order, right? Because when people see a couple hundred contracts appear in S&P, that's not going to chase them away. Like if you saw a 10,000 order block appear, you'd be like, oh my God, what is happening there? So the reason that helps is it rebalances the algos and the other traders. They don't get too intimidated by it. You can continue to passively distribute into strength around that level. The disadvantage of an iceberg is that every time your number completes, like in this scenario, we were talking about doing 400 at a time and 25 lots. Once that 400 completes, you're end of the line, right? So like whoever was ahead of you, if there was someone else ahead of you in the order book, they get to transact. And then, you kind of get back to the head of the line once anyone who is ahead of you transacts. So every time one of those iceberg chunks goes off, you're essentially pushed to the back of the order line. It's particularly true for folks like you or me that are retail. It's a little less important for institutions because of how rapidly things go and how liquid things are and how less sensitive to price and time they are than us. Right? So icebergs are a strategy. They have value. And so when we're looking at them in the real-time order flow that we're seeing here in Bookmap, what we're really understanding from them when they print on the way I have things set up is that someone is transacting in some kind of size that's a little larger than what we had seen over the last 30 minutes, right? So I don't print every iceberg. I print a high standard deviation over a 30-minute sample period. And to me, it's all about relative size. So for the S&P, for example, which is what we see on screen, I'm looking for icebergs at 1,000 or more. And I'm looking for series of them, right? Because what I'm trying to see is whether or not someone is really interested in taking one or the other side of that trade in size. So like, for example, on a down day like today, if we started seeing thousands and thousands of iceberg buys, one after the other, and then we start to see price really start to get chased the other way because basically sellers become exhausted, if not a little scared of that passive buying appetite, that would give me an opportunity for an upside scalp trade, particularly if we had a setup for it, like today, where we've got that hot call. If that hot call was the most active options on the chain by a lot, so we didn't have the midpoint printed, that conviction would go up as well. So that's kind of one way to contextualize icebergs. Someone's hiding their true size. When they're big enough, they're important. They're passive flows. They're less price-sensitive players that are playing in much, much bigger size. So they tend to be institutional orders. Let me know if that helps. And we are back to testing that put wall, this time without that resting bid. Looks like price wants to cut through it. If it does, I do think that hot put and, looks like 579 or so contracts on that bid at 49.70 ES gets filled. From there, continuation is more than possible. This is a day where we broke the opening range to the downside. Then we got that sort of intraday counter trend pop. But it really feels like sellers are taking back control. And we could see where those prior lows were. So we'll zoom back in a little bit more in terms of time and price. And Will, yes, you're seeing icebergs after the fact or in near time, like as they're printing, and then it goes through and does some algorithmic analysis and kind of like will aggregate them. So sometimes the numbers might increase a little bit if it's attributing additional orders to that iceberg. So it's a really helpful way of kind of getting a sense as to what the bigger players are doing, in my opinion. All right, let's take a look over here at the NASDAQ. NASDAQ also seeing that turn to lower price momentum, cutting below VWAP, never made it to the point of control. And we do see CVD, you can see that peak to trough distribution. It's about 1,000 contracts sold there in the last 5 minutes on the NASDAQ. That's not a small amount for a vehicle that doesn't trade with much order book depth, usually about 8 to 10,000. Russell, it's kind of a similar look, maybe slightly more constructive as it's just sort of testing its point of control. But remember, in the grand scheme of things, small caps are getting absolutely destroyed today. Crude oil continuing to push higher, which typically brings rates higher with it. Let's look at the 10s. And yeah, you do get a little bit of that sense, right? The 10s are rolling over a little bit more. We're just going to zoom that out so we can see that happening. That is pushing rates higher, which is likely not great for gold. Yep, gold just above 2,000, but has had a very difficult day overall. And then the euro, which is about 70% of US dollar index, also seeing a pull there as we see rates moving higher and oil moving higher. So all those intermarket dynamics are really important because you can get clues as to where One area is influencing another area, and typically rates lead. So I like to look at rates as more of a leading indicator, but what's interesting is also oil doesn't always, but it can lead rates. And we're seeing a little bit of that today, right? Oil's leading rates higher. Rates have other reasons to go higher because of CPI concerns. That's bringing the dollar higher. That's putting pressure on equities. And we can see we're grinding down now to that most active put strike and that level of resting liquidity, that bid of 49.70. It's about 410 contracts there on the bid. So let's see if we get that fill. I think it's quite likely that we do. And as we continue to look at the potential for where this could go, and I'm not saying this is where it will go, but there are interested parties down here around 49.52. 573 contracts on the bid. That is lower than the second most active put strike. So we'll have to watch to see how this trades. For folks that are on the Discord, this stream is available when the market is open. I am going to close out the live streams on Twitter and YouTube for now. Got some other things I'd like to do, but I appreciate everyone tuning in and expect more of these. So like and subscribe to the YouTube. Follow me on Twitter. You'll see these when I post them. And if you like them, that you like them such that you want to join our awesome community and have access to all these resources, check us out at Traderade.com, where this stream is available to you, and so is the entire Traderade team and our awesome community. Catch up with everyone soon.